Are you truly in control of your life, or are you just a pawn in the global economic machine? A silent epidemic of financial anxiety is sweeping across the developed world, as millions of working adults realize that hard work no longer guarantees a secure future. Every single morning, rising living costs and invisible inflation quietly erode your labor, leaving a lingering fear of systemic exhaustion. This video is not a pitch for overnight wealth, but a cold exposure of economic reality through a real-world capital allocation experiment. Understanding this game grants you an entirely different level of control, allowing you to turn even the smallest capital into an unyielding shield. Let us begin by observing a practical test where $800 is split equally into 8 different asset classes to measure their true resilience against a ruthless market. The first vehicle is a high-yield savings account, a place many mistake for a safe haven, but it yields a mere 0.04% return. Earning 40 cents is not the objective. The true goal here is building an emergency fund, capable of sustaining 5 months of your life when a sudden crisis hits. Statistics reveal that 78% of Americans live paycheck to paycheck, and having immediate cash ensures you never have to beg for predatory loans with catastrophic interest rates. The second asset class is gold, humanity's historic refuge against the invisible thief called inflation. The experiment showed a short-term drop of 0.98%, a disappointing figure on the surface, but the true essence of gold is timeless defense. You must realize that the fiat dollar has lost 95% of its purchasing power since 1913, and holding gold freezes your asset value instead of watching it evaporate through government printing. Utilizing exchange-traded funds allows you to own a piece of global reserves digitally, eliminating the burden of physical storage while maintaining instant liquidity. The third destination is an index fund tracking the top 500 American corporations, representing the absolute powerhouse of the global economy. Owning a single stock is like relying on one fragile lifeline, while an index fund grants you the stability of an entire diversified ecosystem. With a return of 1.84% in just 6 weeks, this vehicle proves that disciplined patience always outlasts market noise. Consistently accumulating $100 a month at an average 8% annual growth over 45 years transforms that modest sacrifice into over $500,000. The fourth channel opens the door to real estate through investment trusts, a method to own commercial property without massive upfront capital. Although the underlying asset value dipped by 0.4%, a dividend payout of 57 cents pushed the total position into net profitability. This is precisely how you collect rent from major office buildings and hotels worldwide, sharing corporate profits legally, without facing the nightmare of property management or crushing debt. The next capital shift relies on commercial trading, where profit is generated from information asymmetry on digital marketplaces. By hunting for undervalued assets and reselling them, the initial $100 yielded a net profit of $67.84. This is a battlefield of raw knowledge and sharpness, where risk is entirely managed if you deeply understand market value, turning the structural mistakes of others into your own immediate gain. In stark contrast to market acumen, the sixth channel involves purchasing individual stock in a mega corporation like Samsung based on pure randomness. The result delivered an unexpected return of 19.43%, proving that luck and timing always coexist in the financial arena. However, a controlled investor never surrenders destiny to chance, choosing instead to utilize fundamental analysis to decode balance sheets and corporate leadership before deploying a single dollar. The cryptocurrency market, specifically Bitcoin, represents the seventh asset, showing an explosive 98% growth in a brief window. The appeal of Bitcoin lies in its decentralized nature, free from the manipulation of central banks, with a strictly capped supply ending in the 22nd century. Yet, monumental gains come with brutal volatility, as history shows that on December 17, 2017, the price touched $20,000, only to plunge below $14,000 just days later. Finally, the eighth channel is lottery scratch cards, a perfect psychological trap that instantly destroys 50% of the allocated capital. This is not investing, it is a voluntary tax levied on the impatient and desperate, even though half of the population still eagerly participates every year. Ending the multi-asset trial, the total return reached 11%, outperforming the annualized market average, and proving that diversification remains the ultimate master key to survival. Now elevate this experiment by handing the total $800 to an absolute beginner, forcing them to make execution choices. Under the weight of reality, their mindset automatically eliminates oversafe options like savings, gold, or real estate trusts to focus on three sharp pillars. The optimal allocation places $200 into the 500 index fund for a baseline, $400 split between tech giants like Tesla and Google, and the remainder into Bitcoin for explosive upside. The financial battleground completely rejects dreamers, demanding a cold mind to manage risk and a vision to pierce through short-term chaos, because money is ultimately the supreme tool to buy back your personal freedom and sovereignty.